Pass your life and health exam using only AI. Question 1. Which of the following is a non-forfeiture option? Waiver of premium, extended term, dividend accumulation, guaranteed insurability. Extended term is a non-forfeiture option that uses the cash value to purchase a term policy with the same face amount as the original policy. Question 2. What is the settlement option where the proceeds remain with the insurer and only earnings are paid? Interest only, fixed period, fixed amount, life income. Under the interest-only option, the insurer retains the principal and pays the earned interest to the beneficiary. Question 3. Which document contains the entire contract? The policy and the application, the policy and the marketing materials, the application and the medical exam, the buyer's guide. The entire contract provision states that the policy and a copy of the application constitute the entire contract between the parties. Question 4. What happens if the primary beneficiary dies before the insured? The death benefit is paid to the state. The death benefit is paid to the contingent beneficiary. The policy is cancelled. The premium is refunded. If the primary beneficiary predeceases the insured, the death benefit goes to the contingent, secondary, beneficiary. Question 5. Who funds a health reimbursement account, HRA? The employee only, the employer only, both employer and employee, the federal government. HRAs are entirely employer-funded and reimburse employees for eligible out-of-pocket medical expenses. Question 6. Which rider allows an insured to purchase additional disability income coverage without evidence of insurability? Cost of living, guaranteed insurability, waiver of premium, return of premium. The guaranteed insurability rider allows the purchase of additional coverage at specified ages without proving insurability. Question 7. What is the primary purpose of a deductible? To pay the producer, to prevent overutilization of insurance, to increase premiums, to cover all costs. A deductible is an initial amount the insured must pay before the policy starts paying, which helps prevent overutilization of the policy. Question 8. What is the main purpose of life insurance? To fund retirement, to protect against premature death, to pay for healthcare, to accumulate cash for vacations. Life insurance is primarily designed to provide financial protection to dependents in the event of the insured's premature death. Question 9. Universal life insurance is characterized by fixed premiums and fixed death benefits, flexible premiums and adjustable death benefits, no cash value, mandatory investment choices. Universal life allows the policy owner to adjust the premium payments and the death benefit amount. Question 10. Under the Affordable Care Act, dependent children can remain on their parents' plan until what age? 21, 24, 26, 30. The ACA requires insurers to allow dependents to remain on their parents' health insurance plan until they turn 26. Question 11. A policy loan is available on which type of policy? Level term, decreasing term, whole life, accidental death. Whole life policies accumulate cash value, which the policy owner can borrow against through a policy loan. Question 12. Under HIPAA, a group health plan cannot impose a pre-existing condition exclusion if the person has had creditable coverage for at least 6 months, 12 months, 18 months, 24 months. HIPAA ensures that individuals with at least 12 months of continuous creditable coverage cannot be subject to pre-existing condition exclusions. Question 13. Medigap policies are designed to replace Medicare, cover individuals under 65, supplement Medicare coverage, provide long-term care. Medigap, Medicare supplement, Policies pay for some of the healthcare costs that original Medicare doesn't cover, like copayments, coinsurance, and deductibles. Question 14. Who has the right to change the beneficiary? The insured, the policy owner, the current beneficiary, the insurer. The policy owner controls the policy and has the right to change the beneficiary, unless the designation is irrevocable. Question 15. Which provision allows an insured a specific number of days to look over a new policy and return it for a full refund? Grace period, free look, incontestability, reinstatement. The free look provision allows the policy owner 10 to 30 days to review the policy and return it for a full refund of premium if not satisfied. Question 16. Which rider waives the premium if the insured becomes totally disabled? Accidental death, waiver of premium, payer benefit, cost of living. The waiver of premium rider waives future premiums if the insured becomes totally disabled according to the policy's definition. Question 17. What is the main characteristic of an HMO? Fee-for-service, preventive care focus, no network restrictions, high deductibles. Health maintenance organizations, HMOs, place a strong emphasis on preventive care to reduce overall healthcare costs. Question 18. An insured's policy is cancelled. The insurer must refund the unearned premium on a short rate basis, pro rata basis, flat rate basis. No refund is required. If the insurer cancels the policy, unearned premiums must be returned to the insured on a pro rata basis. Question 19. What does Medicare Part A cover? Outpatient care, prescription drugs, hospitalization, dental. Medicare Part A primarily covers inpatient hospital care, skilled nursing facility care, hospice, and home health care. Question 20. What type of term insurance has a face amount that reduces over time? Level term, increasing term, decreasing term, renewable term. Decreasing term insurance features a death benefit that decreases over time, often used to cover an amortizing debt like a mortgage.